A new trading week promises more clarity about the prospects of the corporate sector for 2023. Some top US companies have already presented their quarterly reports. As expected, the benchmark stock indexes had a successful day on Friday, and Netflix corporate earnings and Alphabet's plans for layoffs were the benefactor of gains in the stock market. The Dow Jones jumped by 330 points or 1%. The Nasdaq closed with the strongest gain of 2.66%. The S&P 500 climbed by 1.89% to close at 3,972 points. The benchmark indexes opened on a Monday cautiously. Futures on the stock indexes traded sluggishly and mixed in the pre-market. The S&P 500 is expected to trade in the intraday corridor between 3,910 and 4,020 points. The S&P 500 and the Dow Jones halted a three-day losing streak on a Friday. In contrast, the Nasdaq grew by more than 2% in light of the news on the corporate sector. Netflix shares surged by 8.46% because the streaming company increased the number of subscribers more than expected. Besides, Alphabet reported that it would fire 12,000 employees. As a result, its shares jumped by 5.34%. The news enabled the telecom sector to grow by 3.96%, the best result among companies in the S&P 500. As for weekly results, the Dow Jones lost 2.7%, the Nasdaq added 0.55%, the S&P 500 shed 0.66%. Investors still voice concern about corporate earnings because the US economy is showing the signs of a slowdown and a looming recession. In the weeks ahead, financial reports from high-tech companies will serve as a litmus test for a rally. The Nasdaq gained almost 6.2% in 2023, stronger than a 3.45% growth of the S&P. Such superiority is ensured by two factors. Investors are allocating their funds to the shares oversold in 2022, and now investors want to check whether the companies will survive the wide expected economic downturn. Recent economic data mirrored some signs of easing inflation, but also revealed tight employment conditions. This is the key for the Federal Reserve to decide on a further monetary tightening. Recession worries amid high interest rates affected bullish stocks. This forced the large high-tech companies such as Microsoft, Amazon, Alphabet to fire thousands of employees. These same concerns account for the cautious market sentiment today. The New York session today is going to be quiet amid the empty economic calendar. No Fed policymakers will speak today, and some corporate news could set the tone for trading. The shares of a software developer Salesforce rose by 4% in the pre-market after Elliott Management Corporated had injected multi-billion investments into the company. And PayPal Holdings shares dropped by 2.1% after the German watchdog launched proceedings against PayPal Europe over the possibility that it hindered competition. Such news could set the tone today, but investors are anticipating corporate reports from the companies that account for more than half of the S&P 500's value. Their reports will be available in the 2 coming weeks, including Microsoft, Tesla, IBM, and Intel this week. Their records will trigger serious market moves. Being the focal point in the currency market, the euro is holding the upper hand over the US dollar. its index opened the week below 102 points. Having shed 0.03% in the pre-market, the US dollar index is trading now at 101.90. The intraday corridor for the index is seen between 101.50 and 102.30. ECB President Christine Lagarde confirmed that the central bank would continue rate hikes at the same fast pace. Traders got the hint and pushed the euro to the highest level in 9 months against the US dollar. On the contrary, Fed funds futures overvalued the chance that the Fed could increase the official funds rate by 50 basis points next month. Investors reckon that the US Central Bank will lower interest rates by 50 basis points in the second half of the year, on the back of a soft inflation data, consumer spending, and the housing market. Meanwhile, the US dollar is on the defensive in light of the hawkish comments from the ECB president. As for the US Fed, its policymakers mainly agree that interest rates will increase at least to 5% this year. On a Friday, Christopher Waller stated that the central bank could approach the point when interest rates would be restrictive to curb inflation. This gave impetus to the US talks and weakened the US dollar down. The Canadian dollar is again in ground against its American rival, and the USD pair dipped by 0.13% to trade at 1.3360. The currency pair is likely to trade in the corridor between 1.3290 and 1.3420. The loonie will be sensitive to a few events this week, and the Bank of Canada is expected to raise the key interest rate by 25 basis points on Wednesday. A few weeks ago, traders expected a pause in the aggressive cycle of rate hikes. However, upbeat economic data convinced the market of another rate hike this week. Apart from hawkish expectations, the loonie owes its strength to the soft US dollar in tandem with the rising oil prices. Crude oil began this year with a rally on the back of growing oil purchases by China and the forecast by the International Energy Agency about an increase in the global energy demand. At the same time, the European Union's ban on Russian oil imports, which came into force in December, would be expanded with the purified petroleum products. They will be included in the ban from February 5 and will trim oil supplies from Russia. The oil prices have been on the rise. On a Monday, Brent crude rose by 1% to trade at $88.50 a barrel. WTI grew by 0.7%. As for the crypto market, it was inspired by the glimmer of a hope. Bitcoin rallied by 2.3% to $23,199 on Saturday, but failed to consolidate above $23,000. Still, the token is opening a new week with gains, having grown by 1.3%. Bitcoin is trading at $22,880. Altcoins are also trading in the green in sync with the flagship crypto. As for the news on the crypto industry, it's about the FTX crash. In January, federal prosecutors seized nearly $700 million in cash and assets connected to Sam Bankman-Fried, primarily in the form of Robinhood shares. The crypto market is fed up with the bankruptcies of numerous crypto platforms in 2022, and for the time being, Bitcoin is trading in correlation with the high-tech stock index Nasdaq. Bearing in mind reports from high-tech giants that are on tap this week, cryptocurrencies are approaching the turning point. Bitcoin could either rally or fall below $20,000. The intraday corridor for the token is defined between $22,500 and $23,500. InstaForex analysts are keeping close tabs on the global financial markets. See you online tomorrow.